किसी भी ऋण की हो जरूरत या व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, करेंगे पूरे सबके अरमान, नई जिंदगी की है आस, आसमां भी तो है अपने पास, बनाएंगे अब सबको सबल, सुनहरा होगा सबका कल, बुलंद सबके जज्बात है, हम है सबके, हम सबके साथ हैं, हम है सबके, हम सबके साथ हैं, हम है सबके, हम सबके साथ हैं, हम है सबके, हम सबके साथ हैं।
India is a land of diverse cultures, timeless traditions, and rich heritage. Banking and financial inclusion of every individual plays a crucial role in the economic development of the country. However, the sheer, diverse, and expansive landscape poses a challenge for setting up of brick-and-mortar banks and financial institutions in every nook and corner of the country. There was a need to bridge the gap between a potential customer and the bank. Sabke in Hindi means for everyone, and in English it means below 1,000. The name symbolizes its vision of universal financial inclusion by creating technology-enabled touchpoints within 1,000 meters of every household.
What we do, we essentially link banks to last mile customers, the unbanked customers, in the regions where banks don't necessarily reach them in a brick and mortar fashion. So they tie up with us and we kind of find the right customer base, acquire those customers, do all the paperwork that's required so that the bank then onboards this customer and provides the services, whether it is savings service, whether it is loans or any other payment services. We enable those things by acting as a bridge between the borrower and the lender or saver and the bank.
మేము వ్యవసాయదారుని, నేను ఇక్కడ డబ్బులు వేసుకోవాలన్నా తీసుకోవాలన్నా అనుకూలంగా ఉంది. ఆ బ్యాంకులో వేసి సమయం వృధా చేసుకోకుండా ఇక్కడనే అనుకూలంగా తీసుకొని మా పనులు మేము సాగించుకుంటున్నాం.
The way the model works is that we deploy a fleet of agents on the ground, with typically local retailers who run their own regular shops. We try and convert them to develop. Effectively, they become ATMs. We hand out this low-end technology equipment, which is a mobile phone and a small printer, and they sort of then use their own cash, which is generated in their regular business, to be able to provide services to the communities around them. Over a period of time, we also added many products on this platform. We now give out loans in groups of women. We give loans to individual entrepreneurs. We collect savings. We do money transfers. We allow people to withdraw their account balances. So that's kind of how we have built the whole model, which is in a way a model that enables any financial institution.
Sabke's feet on the street and technology platform which it developed really helped the bank to go out and expand their operations in these areas. So over the last 5 years, we have grown 100 times. We are well recognized in the banking world. We have a good support from our investor team. We see that confidence keeps on growing. We have recently concluded 2 rounds of investment, and investor confidence is really high on us. All this has happened in a very short while. There is no looking back from here. That's what I feel. We are growing, and we are growing very strong.
Sabke has developed software applications that are integrated with core banking systems and work on mobile phones, allowing the users to perform financial transactions in a safe environment, eliminating the need for a traditional brick-and-mortar bank. The future of banking is digital, and Sabke is doing its bit in moving India towards a safer, more accessible digital space. With Sabke expanding its reach and its ever-growing customer and agent base, we are positive that the company's mission to connect every individual and household to mainstream financial system, thus promoting an inclusive and prosperous economy, standing true to its motto, Sabke liye samriddhi laye.
Kaleidofin is a fintech company which leverages the power of technology and tries to make the most of the recent enhancements in digital payment space to be able to create customized solutions for its customers. It tries to understand the requirements of the customer. It then leverages the recent enhancements in digital banking and it uses deep analytics to be able to identify the relevant financial services for a customer that, if acquired by a customer, will definitely help them reach out to their goals. Kaleidofin works with a very large number of very high quality entities which are already working with customers. The reason why we chose to work with intermediaries was mainly because our customer segment still hasn't completely switched to mobile phones and digital media to be able to get into transactions. And we feel that for the longest period of time, there might be a requirement for customers to get some kind of assistance from some of these aggregators to be able to carry out transactions.
Our first partnership was with SAMVAD. SAMVAD is an urban cooperative bank with 600,000 plus customers. These customers are all in the informal sector. They typically have access to feature phones and really don't have access to any gold-linked financial solutions. That's what we offer to SAMVAD Bank. Financial services have been around for a long time. Product manufacturers, credit, loans, insurance, mutual funds, all these products have been around for a long time. But how do these products combine together to become a coherent solution that really helps a customer send their daughter to college? You not only need to be saving regularly, you also need protection against what could happen to you. So you don't just need regular investment, you also need insurance. You also need a liquidity line because you're working in the informal sector and you don't get a monthly paycheck. Insurance as well as a liquidity line all put together, and this is now the new solution. This is the Kaleidofin solution.
A very good evening and a warm welcome to all our viewers on Zoom and Facebook Live. We welcome you to our webinar series, Basics Sabke SAMVAD, in which we facilitate conversations with social sector innovators, influencers, and integrators. This series is our tribute to late Mr. V. Nagarajan and late Mr. Amit Mehta, founding members of the Basics Social Enterprise Group and stellar personalities who have left behind a legacy and an imprint on the social sector. We thank all of you for taking out time and joining us for what is surely going to be a stimulating and engaging session. Sabke Impact Solutions Limited is a corporate banking correspondent and digital finance intermediary with high-tech and touch capabilities, which offers affordable, accessible, and scalable financial solutions to the underserved communities. Today's session will be a freewheeling chat about reimagining financial inclusion with Ms. Sucharita Mukherjee, CEO and Promoter Director, Kaleidofin Private Limited. We will be hosting a Q&A session in the last 10 to 15 minutes of this session and would request our viewers to post their questions in the chat box on Zoom and in the section on Facebook. Without further ado, I would like to call upon Mr. Sasidhar Thumuluri, CEO and MD of Sabke Impact Solutions, to take forward the session. Over to you, sir.
Thank you, Tanvi. Thank you so much. And good evening, good morning, and good afternoon to everyone, depending on where you are signing in from. Thank you so much for making time and encouraging us in this humble endeavor of sharing knowledge. It is indeed a pleasure and an honor, in fact, to invite and introduce our guest today, Sucharita Mukherjee, an inspirational and dynamic entrepreneur and a well-respected thought leader in the space of financial inclusion. Sucharita co-founded Kaleidofin in 2017. Kaleidofin is a fintech platform powered by deep tech and data science
which enables customers to meet real-life goals by providing them access to intuitive and tailor-made financial solutions. Some of their products include Kaleido Goals, goal-based saving solutions, Kaleido KI Score, which is a ML-based automated credit health check for informal sector customers. Kaleido Credit is a capital market transaction instrument, which is backed by KI Score. And Kaleido Pay is a payment solution for the informal sector. We will know more about these and a lot more of what Kaleidofin does in our conversation with Sucharita. Sucharita pursued her MBA from IIM Ahmedabad in Finance and Marketing and BA Economics from Lady Shriram College, Delhi University. She began her career in Deutsche Bank in India and later moved to UK. She then moved on to Morgan Stanley before leaving her investment banking career to move back to India in 2008. In India, she joined IFMR Trust as co-founder and set up Northern Arc Capital, erstwhile IFMR Capital, which was the first capital markets platform for financial inclusion sector. She was the founding CEO of the company and later on moved to become the group CEO of Dwara Group, IFMR Holdings Group, erstwhile IFMR Holdings Group. Sucharita co-founded Kaleidofin in 2017, along with another industry veteran and equally inspiring, Puneet Gupta. She presently is the CEO and promoter director of Kaleidofin. She had almost 2 decades of experience in financial services sector before joining Kaleidofin. Sucharita was chosen as a young global leader at World Economic Forum in 2019 and was awarded Women Leader in FinTech by IFTA in 2018. And very recently, she has been awarded IFTA 2020 Women Leader in FinTech again. So congratulations, Sucharita, and thank you for taking time to join us and sharing your wisdom and experience with our audience today. The topic, as you all know, for today's Samvad is reimagining financial inclusion. We chose this topic because Sucharita, in fact, lives this topic day in and day out in her work. We know how that is. And so welcome again. And
thank you so much.
Yeah, it's indeed a pleasure. And we've been talking a lot about how the industry is evolving and great work people like you are doing. So it will be good for our audience to learn about what led you to Kaleidofin. We know about your achievements as a professional lead, but it will be good to know the inside story. What is it about Kaleidofin that led you here?
Yeah. No, thanks so much for inviting me here. It's my pleasure to be here. I think this has been like more than a decade-long journey that led me ultimately to Kaleidofin, and I was so fortunate to meet the right people along the way because I certainly could not have done it alone. I think in the first decade of my career, I felt like I learned a lot of hard structuring skills. I was structuring products for very big financial institutions, hedge funds, pension funds, and also saw the good side of capital markets, all the innovation, all the bad side as well, and learned a lot of lessons from there. Eventually, the bad side of capital markets became clearer and clearer as more wisdom dawned on me, and I could see it more clearly, and I felt like I wanted to be part of something bigger, something more impactful. I didn't know what, but I wanted to do something that would use my skills. I wanted to have a special impact rather than starting from scratch, which was also, of course, an option. And that's how my journey in financial inclusion started, and the perfect opportunity in creating a capital markets platform for financial inclusion came along. The same sort of principle of how do you actually make good financial products for customers at the retail level, and the principles actually remain exactly the same, of diversification, of safety, capital protection. The principles actually don't change that much when you change $100 million to $2. the principles remain exactly the same. So that same training actually helps in structuring good financial products for retail customers, because a customer has a balance sheet, they have future cash flows, they have several uncertainties in their life that you have to insure against. I think what made it really interesting was the fact that there was this sort of perfect storm that was happening, in the years from 2016 to 20, where at least it seemed theoretically possible that now we can reach the customer, every customer, remotely. It's a possibility. Now, we know, and and I know, I'm sure many of the people in the audience know, it's actually not that simple. But at least it's a theoretical possibility. Every person, had a working bank account. Every person had a feature phone. They were contactable. And we started to think about why it's not possible for us to deliver tailored financial solutions to hundreds of millions of customers. And certainly our current approach didn't seem to be adequate. There seemed to be the need for an industry platform that could power many financial institutions with field presence to be doing much more with their customers. And that's how, the idea of Kaleidofin being the neobank, the platform behind financial institutions, network players that are out there serving the customer every day, make them more powerful. That's how it came along. It's just been so inspiring to be part of this journey for the last 3 years.
Incredible. In fact, I think I should say it's a bold move, given I think nobody did what you're doing. Nobody did it before. People tried many models, but bringing a wealth tech platform for the low-income communities, in my opinion, is a unique and the first of its kind. As when you started off, congratulations on that. But could you throw a bit more light on what have you done so far? What are the products? I know I read out a few products, but I think it'd be good for the audience to learn what do you offer on this platform.
Yes, absolutely. So Kaleidofin basically, as a neobank, wants to offer customers the entire suite of financial solutions. We started off with a goal-based financial solution approach, which basically meant to say that, look, everybody, you, me, our customers also, we care about our real life goals. We really don't care that much about financial products. Nobody goes to social media and says that, what, I just bought a life insurance policy. Hey, I'm so thrilled. Let me share it with my friends. That's not what people care about, right? People care about, maybe their daughter going to LSR, right? I mean, they get thrilled about stuff like that, but they don't care about financial products. So I think number one, how do we make financial products much more intuitive to customers, much more closely aligned to their real life goals? And our first flagship financial solution, Kaleido Goals, was designed just to do that, where the marketing pitch was largely aligned to customers' goals, and we combined a safe investment product with insurance and a liquidity line to make sure that customers could get to their real life goals, like sending their kids to college, like repairing their homes, in a very predictable way. And we have, about 130,000 customers there. Overall, about 35 plus partners for that product. Now, COVID was actually a blow to our customers who are, largely working in the informal customer segment, no social security incomes. There were huge loss of incomes for at least 3 to 4 months. And therefore, when the pandemic happened, our response as Kaleidofin was, how can we now, really answer our customers' most urgent requirements now? it's fine. We had a plan, we had a product roadmap, but honestly, the world has changed and our customers need liquidity lines urgently. They also needed digital payments urgently. And so we decided in response to the pandemic also to launch a service called Kaleidopay, which is a digital payment solution. This digital payment solution actually even works for feature phone customers. We realized that most customers couldn't even set up UPI handles because it was so difficult to. I mean, you either don't have a debit card or you don't have a smartphone or your phone is not linked. And the end result is that 90% of customers don't get served, our customer segment. So we launched Kaleidopay, which was very exciting. We actually launched it in 40 days flat, fastest ever product launch for us in May of last year. That the largest use case has been for loan collections, but we hope to broaden the use cases to utility bill payments, cash in, cash out, and so on. This second big product that we launched was KaiScore. KaiScore is an automated, partially ML-based credit health check. And this had two purposes. One was to underwrite loans. We wanted to make sure that the underwriting decisions are more consistent. We ourselves, when we were running our own operations, we found it difficult to train for this skill. It's really quite hard. And no matter how much training resources you seem to throw, the output is not consistent. So it was very clear that if we want to provide our customers more tailored loan products, let's say a working capital loan, for example, then it's clear that you need to have a credit model and you need to take into account the data. So we launched KaiScore. KaiScore, now has rated almost 600,000 customers. And overall, about 3,000 crores of credit has gone through it. The other associated use cases of KaiScore were to really launch the micro entrepreneur loan segment, because today most customers still get group loans, and how do we really underwrite these customers individually? How do we give them loans to grow their businesses? And it then started to get used for micro entrepreneur loans. And then lastly, our last sub-product on the KaiScore side is Kaleido Credit, where it started to get used for capital markets transactions. So similarly, it provided that confidence to investors to buy these loan pools because they had a score and 20 different risk metrics per customer to judge the performance of the loan pool and then base their investment decisions. So overall, that has been the journey, pretty much, responding to customers' urgent requirements. We thought we really had to come good because, no point sort of saying this is our mission and then, when your customers really need you, not doing that much about it. So we felt responsible to respond quickly.
Very interesting. So, and in fact, I should say, quite path-breaking in the sense that you are responding to the need as you are evolving. It's not like a products cut out there and you're trying to push them in the market. It looks like you're beginning to understand the customer needs, and as the market or the demand is shifting, you are also trying to sort of respond to that. Sorry, I pronounced KaiScore as KI-score, so thanks for that. So
No,
it's interesting how you are thinking about microfinance customers to get onto a digital journey, and the whole KaiScore is sort of available to now have more than 500,000 customers, 3,000 crores loans disbursed through that channel. Amazing in the time you have managed to do this. Tell me how this works, because I know that you don't necessarily have team on the street. You partner with, you said 35 partners, which is amazing, large number. How do you manage to get the customer insights? How do you actually make sure that what you are doing is very responsive, as you seem to be doing? So it would be good to understand your operating model and who pays for this and how does it work?
Yeah. So we have entirely a B2B2C operating model. We partner with about 40 institutions. These range from MFIs, cooperative banks, NGOs, corporates as well, to reach out to customers. And largely what we are saying is, look, we will bring the product design capability, we will bring the tech and data science platforms, and let our institutions do what they do best, which is outreach to the customer. And in some sense, how we keep our sort of ears close to the ground is we have invested in a training team which is on the field, which interacts frequently with all of the field officers, staff, customers, and keeps throwing us insights into how our customers responding to the product. So let me give you an example. In Kaleido Goals, for example, this is a savings product. As against a loan product, the financial behavior is actually very different. We saw that while customers were quite happy to get onboarded with KYC and payment in a group setting, they weren't quite ready to take that decision in a group. It was just too, public a setting to do that. And we found that, there was that hesitation. So we actually introduced automated IVR services, and we also backed it up with a regional language call center. And we actually saw that, sometimes, our women customers would have like 20-minute long conversations, to talk about their life goals and whether they should get started or not. They're already fully onboarded from a paperwork perspective. But that process of consent is very important, and we want to make sure we do it well. And we actually saw that one-to-one conversation provided them enough respect, enough space, enough time to chat with other members of the family, especially their husbands, and then, arrive at a considered decision. So, for example, we decided, therefore, that, okay, we need to add this automated voice platform in multiple languages, not just in multiple languages, multiple dialects. In order to make this work, we need to back it up with a call center, and customers, when given a choice between two, face-to-face with an field officer in a group setting versus one-to-one, they choose one-to-one almost every single time. And, these are the kind of insights that our trainers constantly give us, that somehow, we're not able to make them cross the hump. Lots and lots of customers otherwise interested. But I think that really helps us distill these insights and make our products and processes better.
Wonderful. So basically what you're trying to say is the time has come to treat these customers as individual entities and not always herd them together, which is what the famous microfinance model is all about. So let's get into that a little bit more. We could be a little provocative, and I think we're used to some of these conversations earlier too. Of course, microfinance, to its credit, has done a lot in bringing technology to bear, and lots of efficiencies today. So much is there with the loan officer itself to use, to serve the customers better. But then the tenets have not changed. The group remains, the whole cash remains to a large extent. Pricing has not changed much. So the efficiency gains have not yet come in the expected ways, right? So I'm just trying to make this in the form of a question, that are you being a bit too idealistic, that people will do, they want individual treatment, but it looks like not much is really happening on that front, giving customers the digital tools. I know payments have happened a little bit in the pandemic period, but still big dent has to be made. So where do you see this going? Are you saying that there's a movement towards individual, and there are more digital products that are going to come around, and how are we prepared for that?
Yeah, I think that, for example, I mean, I'll be honest with you. Of course, we want to treat customers with respect, and uh, there is an ideal way. But for us, it wasn't working. It was literally as simple as that. The process wasn't working in a group setting. And maybe it's the difference between, loans and savings. That savings, there's no gun to your head. You're not giving money, you're actually taking money from the customer. Very different. Maybe that's why, but it was pure business logic that led us to, okay, let's try a more individual approach. Having said that, even on the credit side, what we see on the ground is that we have several partners actually doing more individual loans, and much more oriented towards small entrepreneurs. However, this does require uh, either a credit decisioning engine at the very least, or a credit model, or both. And this does require, therefore, that I don't think it's a huge investment of money. I think it's much more investment of management bandwidth to say, okay, how do my new processes look? Surely I can't run the same process, same group process, and also have the credit model running, because you want to get efficiencies out of it. It is a emerging trend. I don't think it's a dominant trend just yet, but I do think that there are many thoughtful institutions who are going in this direction. On the other hand, we also see that attendance in group meetings had already started dwindling in the South, where women are more empowered, and also work outside home, more mobile. In the North, it was slightly higher, but across the board, this has now dwindled, and the pandemic, of course, has not helped. In all of this, and I think that could be a forcing function to say that, okay, there really isn't any tangible way to maintain this group dynamic, and maybe the pandemic could be the one. I would certainly hope that a larger part of the industry moves towards individual lending. I think the group lending is a great starter product. I just think it's necessary, but it's not sufficient. And in the future, it may not be necessary as well, as we stabilize new operating models. I think the question is also change management within organizations. And as leaders, are we ready to take on the mantle or not? And, I mean, it's kind of easy to say, let's not fix something that's not broken, uh, and let it be. But I do think that I'm very hopeful that this change is happening. I can certainly see it in 20% of the cases. I wouldn't say it's 50% plus, but I think this means stronger business models, better differentiation, and a better deal for the customer as well. So I think all around it's good news. I mean, and I'm very biased. So with respect to that point.
You're more than biased. I think you're trying to be more futuristic in planting that seed in the minds, because it's important for disruptors like yourselves to pose that challenge, right? So 20%, 20 million, potentially 20 million customers. We're talking about 100 million customers roughly in microfinance space today. So between all the models, so that's a big number, right? So if we can really crack that 20% cream, let's call it that way, then we would have solved the problem, because everything else follows. It's a matter of time, right? That everything else falls in. So the point is not only about someone coming out of a group and borrowing individual, which is important. And of course, there are aspects, like you just said, savings is a very, very important instrument in financial inclusion. Rather, savings should come first and then probably credit, because there's a leverage effect. But then there is a whole suite of financial needs, right? It's not just a loan, right? It is many such requirements. So, and you are trying to devise some of these instruments, micro instruments, to bear on the rails that microfinance broadly have created, right? But are you seeing a multiplicity of financial products coming across on these digital rails that are being created, and also the distribution system, manual system as well, right? It's not just hybrid, let's call it hybrid. So are we seeing that happening, or are we just converting group people to individual, and is that the progress? But are we also looking at a much broader development out there?
Yeah. So I think that there are some institutions with a strategy who want to stay loan focused, credit focused, and I think that that's a definite strategy. It's much more what your goals are as an institution. I don't think there is a right and wrong there. Who want to say that, look, let me just get more different types of loan products. Let me do my current business better. I don't want to be, just to play devil's advocate, jack of all. I want to be good at loans. I want to be good at underwriting, and let me introduce better loan products. And I think that that is a definite trend. There are other types of institutions who are more seeing themselves as a financial advisor to the customer, who want that relationship not just with the customer, but with the household, with the extended household. And that's their ambition. And for them, I think the multiple financial services play is super interesting. And the kind of investments they would need to make would be very different. Kaleidofin is actually in the sort of space of making these decisions easier, if you will, for institutions. So, for example, we know that it's a real pain to integrate with 10 AMCs, 5 insurance companies, do all the reconciliation in an automated way. And that itself is enough to prevent the move forward. So we're saying that, hey, you know what, we can provide this to you in a box. We will provide you the APIs, and you don't have to deal with so many counterparties. You deal with one. And that's Kaleidofin. And each one of you can be a neobank, not just Kaleidofin. That's where we want to go. And we want to make that decision easier, because otherwise I really think that decision is too tough. It requires too much investment, too much time. And I think it's really a superhuman effort, but we need sort of these platforms like us in place. On the other side, I think, credit models, differentiated credit models, not just differentiated credit models, differentiated pricing strategies are also coming up, where credit models are not just being used to underwrite and reduce risk, but also to attract their good customers, because a lot of us actually lose our best customers to larger institutions. And how do we retain these customers? We know they are better risk, but we don't quite know how to price them. So we can also come up with good retention strategies, better products for more creditworthy customers, better tailored products. So both of these are strong trends, but it does need sort of a good, solid tech and data science platform. And, that's what we want to provide and make that decision super easy.
Of course. So with these enablers in place, I think more and more acceptability to at least lead customers to the possibilities, I think would be interesting, right? Because these are a big market that is already integrated into the financial system through microfinance and similar initiatives. So you talked about data, right? Data and scoring, and also, do you see there is enough data for these customer segments that can be used to make assessments, not only for credit but other financial needs? I mean, Because one view is that, customers are not digitally integrated. There should be, there should be more digital inclusion before we get into a financial digital inclusion. So what is your experience in that side?
Actually, on this point, I have a very strong view. I think because of the NBFC MFI regulation, which necessitated, contributing to credit bureaus and maintaining this data centrally. As a result, there are 100 million customers, probably 200 million plus records. Kaleidofin has built its model of 10 million customer data points, spread across 350 districts. And sure, of course, more data would be welcome. But do we have enough data to get started? Absolutely, 100% we do. There are many, many industries where, honestly, you have to make do with alternate data. But why do we use the word alternate data? Because it's alternate to core transaction data. We actually have the real stuff. We have loan transaction data, which is the gold dust. Everything else is like the 95 to 100% confidence, right? I mean, how many times did you call your mother, etc.? I don't know whether it's predictive. We haven't gotten there yet. But we certainly know that loan transaction data is extraordinarily predictive. Savings transaction data is very, very predictive. And you can build strong models, strong predictive models of those two large sets of data. We've also found that process data, for example, quality of KYC, attendance records, absenteeism of field staff, even those are predictive because it sort of speaks to the quality of the process that was used to originate. So I think that the data exists. Can we go from 90 to 100? Surely. But we don't need to wait for it.
That's promising. I think certainly Credit Bureau and perhaps a lot of data that is still sitting within MFI, MIS systems, I think could also be untapped to derive some of these insights. So that leads to the question of, how are we, the segment that you are targeting, how are these developments in the India stack world? Right, the whole account aggregator, walk-in. So how are we planning to leverage that for the benefit of this community? Are we ready for that, or is it still work in progress?
Still very much work in progress, but I think so. For example, the account aggregator holds the promise of saying that all financial services data of a customer, whether it's in Jan Dhan bank accounts, whether it's an LIC policy that customer might have taken forgotten about, also will be available to a financial services provider, let's say in this case lenders, to take better decisions. But frankly speaking, it could be provided to an insurance company to take better underwriting decisions there. So, the good thing is that I think the group of people designing the protocols are very open and to the fact that we need to design a process that works for the informal sector customer. It shouldn't be designed only for customers like you and me. And should be more inclusive and easy to use. This consent that this customer needs to give to provide the data to whoever, lender, insurer, whoever, should be easy. And we are working to design that process. Currently, 12 banks are on the account aggregator platform. So it's promising. My sense is this goes the way UPI does. The one big difference I think we can make, and I think a lot of you on this group, including yourself, Shashi, are doing, is helping us design a better process, a more inclusive process for informal sector customers so they can give this consent easily. We want to learn from previous challenges.
Yeah, I think that's fair. Collaborative. I think we have to solve this together, and I think uh, these solutions are not yet tested in the mainstream market. So I think that way we are in the queue and should be ready to take on. So
Yeah,
I think, yeah,
no, and we're at the right time.
yeah,
Um,
exactly. So let me quickly switch to some questions that are flowing in. I don't know if Dr. Datta is still with us. If he has a few questions on the whole aspect of group versus individual and financial advisory. Um, Let me see if he is able to come in and ask the question himself. Yeah, I think he's not there. So what he's basically alluding to is this whole notion of social collateral is being challenged to an extent, especially when the groups become more mature and in third, fourth cycle, right? So is that well-founded? Are institutions ready to sort of tackle that challenge? Because most of the MFIs are used to group lending, and then when it becomes an individualized business, although data may help, but what is the sort of way to address that movement out of groups naturally by customers, but institutions, are they ready to tackle that?
yeah, I think I do think that this is very much the job of senior leadership and top management. I think it's entirely possible to make this shift and let's say to redefine the group loan product as a starter loan product rather than the only product. I think it has an important place for new to credit customers. I don't think there is a very good way of assessing a completely new customer. And the social collateral does help. So does it have value? Yes, but it may be 20% of the journey and not 100%. My sense is that this is a change in uh, thought that senior leadership teams will need to embrace, to say how do my processes change, how do I need to upgrade my staff skills, maybe my own skills, right? I can give you my own example. Like 7 years ago, I didn't know how to do internet banking myself. I found it so difficult. Puneet would, pull my leg all the time. And, today I am much better. And I have a, I'm much better skilled at all the technology related applications. So it's perfectly possible to upskill the entire team. I think the vision that the senior leadership team really brings is going to be the driver. Companies like Kaleidofin can bring in the tech and data science platforms. I think earlier the case was that you had to build the tech and data science capability, and I think that is tough to do because you're trying to combine two very different cultures into one, which is inherently difficult, and trying to be good at two very different things. It's possible, but it's challenging. It's very, very challenging. So I would say then it really becomes, a change in mindset, upskilling, change in processes, and devoting some disproportionate time to this change. I think that's what's really going to make it happen. I don't think at all it requires a big capital commitment anymore.
Fair enough. Change is tough, but it's needed. So one question that's coming is, on a differentiation, right? Kaleidofin, how do you differentiate from other aggregators who's potentially trying to cross-sell, different products to the same set of customers? So are you different than those aggregators?
I actually feel, very frankly, that we are at the stage of life in the evolution of the sector where I feel it would be great to have more players. I think, everybody asks us this question, who are your competitors? And certainly we compete against, the informal markets like chit funds. Surely, yes, absolutely. We are constantly trying to convince customers that, saving in Kaleido Goals, it makes much more sense than saving in a chit fund. But, are there other aggregators? No, I would say there are many payment service providers, but I don't think there are that many aggregators. On certain products, for example, like iScore, we do have competitors in the form of credit bureaus. I think where I saw a question on the chat as well, how we differentiate ourselves there is that Score is meant only for informal sector customers. When you look at an experience score, it actually, puts Shashi and a microfinance woman customer on the same scale. And honestly, you will never get a good Gini coefficient if you try to make a model that fits both Shashi, sorry, using you as an example, and a microfinance customer, because they are too different from each other. So what we have is a model that actually specializes in only the informal sector customer. Also, we take into account demographic, process-related variables, and we also build customized models per geography, per even institution. Use cases are also much, much more varied. So we not only provide a score, we provide a decision. We provide, for example, maximum credit limits, recommended interest rates, and recommended loan products. Let's say as 3 different use cases. This is because we understand the partner. We are not just selling a product. We want the product to be useful to you. Many people say, hey, you know what, I have this code, I don't know what to do with it. And that's because you need to make that obvious. You need to kind of think about what is the ultimate decision that the institution is taking with your credit score. Just simply publishing a score is not good enough. It's easier, but it's not good enough. So, but that requires an understanding of your processes, of your objectives, which we bring to the table. So that's how we differentiate ourselves. We are not interested in scoring Shashi at all. So we are not going to play in that space. And, we want to stay focused on this informal sector customer space.
Yeah, I wish I can get a loan through Score. I'd like to try. One of our senior colleagues, Dinesh, has a couple of questions. Let me unmute him so that he's unmuted. Yeah, Dinesh, go ahead.
Hi. Yeah, good evening, Sucharita. Yeah, Dinesh this side. So Sucharita, two questions. One is about this saving product, which you are doing as a per category. So what is the retention rate, and has COVID changed it for better or for worse, retention rate on a monthly basis? That is the first one. And the other question was, I think if you can just tell this, then I will ask the other one. Yeah.
Sure. Yeah. So, our overall retention rates are over 90% right now. Also because it's harder to get a customer in. I wouldn't paint this as too good to be true. The retention rates are good because the customer consent process is very, very strong. And it's hard to get people in the door, but then they generally stick around. But I would say when the pandemic just started, honestly, we thought that we would experience a huge decline in overall savings balances, because, in some sense, this is the moment customers, at least a lot of customers, probably had been saving for. And we were bracing ourselves for it. However, the other dynamic that was happening was that customers also wanted to know how much return they were earning. So we started getting a lot of incoming calls around what is my balance, what is the process of withdrawal? So the call center lines were like ringing, and that was going through the roof. But the fact that we delivered a very stable return of, let's say, 100 to 150 basis points over benchmark, we generally use the SBI recurring deposit rate as a good benchmark, really made us earn the trust of customers in some sense. So a lot of customers were nervous, and our call center did a good job in making sure that customer returns were communicated, balances were communicated, and we made the process very easy. So earlier it would require 2 calls to do a redemption, just to make sure somebody's not doing this by mistake. Um, we made the process really, really simple. But we saw that the attrition rates remained constant. They didn't go up, they didn't go down. And post September onwards, we started seeing customer accretion, both new paying customers come up, as well as savings balances build up. So our average savings balance today is about 6,500 rupees. And that has increased over the past 6 months or so. But overall, I think customers want to know, first and foremost, my money is safe and it's growing. Nobody is greedy. Nobody wants like a 20% return. But as long as, if SBI RD is at 4%, you're delivering 6%, honestly, more than happy. I think that's what really made the difference. I think if this was, if you remember, mutual funds were very volatile at that point of time. If we hadn't sort of paid attention to that dynamic money management, I think it could have been different as well. Did I answer your question?
Yeah, Sucharita. So I think there was another one just related to this question, because most of these customers, they have a very short-term loan tenure, like 18 months, 24 months. So once the loan is over, so have you, I'm sure you would have done some analysis that after that behavior changes, or the customer continues. For example, if they're taking this saving or wealth management product, specifically mutual fund, and obviously the tendency should be that it should be more than 3 years, 4 or 5 years. But is this changing once the loan gets over? They take a loan, for example, from any other MFI who might not be a partner. So they continue that saving behavior, or there's some dip in this?
Yeah, no, we haven't noticed any trend of customer attrition once the loan matures. You are right that the savings terms are in the range of 4.5 years. Earlier, it used to be more like 3.5 years. Now it has gone up to 4.5 years. And what we see is that if you don't sell the loan savings product at the time of loan disbursement, that itself makes a big difference. So we know, right? I mean, we know that if you bundle a sale and make it compulsory, then of course you're going to get a lot of attrition at loan maturity. But what we did was we made sure that documents were taken at the time of loan disbursement, but not the investment decision. Because we said that's a good time to take the documents. That's also an enormous point of friction. But let's de-link the investment decision. Let that be a one-on-one decision. And I think that running that proper customer consent process is very important. So, honestly, we could have maybe double the number of customers, but huge volatility in savings and also lesser trust with the customers. I think word of mouth is also important. Gaining the trust of the customer is very, very important, and keeping your promises is important. So because of the way the customer consent process is designed, we don't actually see any noticeable attrition. In fact, it's a great way of retaining customers, because let's say you lost the customer to competition on the loan, but you still have the savings product. That's actually a great hook to go back to the customer and say, hey, you know what, I still see you saving. do you need X type of loan now? So it actually could be a great retention tactic.
Great, thanks, Dinesh. Let me close with one last question. I don't know if Ma'am Girija Srinivasan is available to ask directly, but in the interest of time, I think that she's trying to ask whether there is an impact on the pricing because of the data-led lending that you are now doing. Is there any cost saving for the customer? Are we passing on any benefits to the customer in this process?
Yeah. So, so let me answer the question in two parts. We have one product called Crediline, which is loans that are secured by savings of customers. There is a huge cost advantage. The pricing of the loan is anywhere between 13 to 15%. And this is primarily because this loan is very safe. It's backed up by collateral and very liquid collateral. However, the process has to be managed seamlessly and in a low-cost manner. On the micro entrepreneur loans, for example, that have gone through KaiScore, what we see is that 20 to 21% is the median loan interest rate. So I would say it's not appreciably lower, but it's slightly lower than prevailing interest rates. And we have, convinced, a few of our financial institutions to price at just below 20, the 18 to 20% range for their best customers as well. So this is not a rate that's available to all customers, but it's available for better customers. This is a journey, I would say. This is a journey of seeing the proof of the pudding. This is the journey of debt capital markets seeing that, okay, hey, you know what? This is a KaiScore 1 to 4 loan, so I will price it differently, which is why we are using KaiScore in the debt capital market space as well. And we need to see a little bit more proof of the pudding. So let's say another 12 months will make a difference to this argument. We are also liaising with rating agencies. Better ratings means better price as well. And better price to the lender means better price to the customer. Right? That's how the flow works. So it's a journey, and we're in the beginning part of the journey. We made small inroads today.
That's impressive. I think in the beginning, if we are able to see that dent, then I think there is a long hope, a big hope in the long run. I think that's the intent of that question as well, I believe. Ultimately, the benefits have to be distributed in that sense, right? It should not be accrued. Thank you. I think that's a very good way to close on a positive note with all the incredible work that you and Puneet are set out to do. All the very best and congratulations for all the success you achieved already. And thank you for sharing this openly with all of us and so much to take away this evening. Thank you, Sucharita.
Thank you so much, Shashi. And thanks to all of the audience who came here to listen to this conversation. A lot of you are dear friends, so thanks so much.
Yeah, we could not answer all the questions because of the paucity of time, but we'll try to see if we can reach out. But over to you, Tanvi, to close out the session.
Thank you, sir. Thank you very much, ma'am, for this insightful and informative session. And thank you everyone for joining us today. We hope this session has been helpful in shedding some light on how technology is enabling opportunities to bring financial inclusion. Don't forget to follow all our social media handles, the link of which are in the chat box, and to get the updates on the next session of SAMVAD. Good evening and thank you.
Thank you, everyone. Stay tuned for the next.
Thank you.
नए जमाने के नए हैं रास्ते लाए हैं कुछ हम सबके वास्ते सुनेंगे सबके दिल की बात रहेंगे साथ दिन हो या रात हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं। किसी भी ऋण की हो जरूरत या व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, करेंगे पूरे सबके अरमान, नई जिंदगी की है राह। बुलंद सबके जज्बात हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके,